Welcome to the Cryptosphere. This is Cryptogenic coming at you. Today is Monday, June 13th at 11:37 a.m. here in sunny Northern California. As you all know, there's some bearishness in this market here, and the question is, how low could we go, and is there any indication of how low we might go? We're going to start with this 4-hour chart. I've been looking at this 4-hour chart. As we see, we had a trend that went down, then a range that we moved around in. Now we broke down into another trend. This is a second trend that we're moving down into. And the question is, how far will this trend go? So first I had support and resistance lines between $25,000 and $25,878. We crashed right through those lines. I had another line at $23,987. We crashed right beneath that line, and we touched 22,500 or 22,570, something like that. So these are my preliminary lines, 22,152 to 23,978. I want to show you something, though. I want to highlight this move right here. See this? It's interesting to me that we had the same move over here. It looks almost exactly the same. So if we recapitulate this move here, what would that look like? Well, starting from here and going down to the bottom, what that would look like if we make this, if we set it over that move there and make that the top, that would take us almost down to $20,000 at the bottom. So that takes us right to 20,000. 20,107 would be the bottom. If it does this, notice that in this crash structure, it breaks down, finds temporary support, and then breaks down one last time, capitulates one last time before it starts moving upward. We could do that, or this could be the bottom. Now, the key for determining whether we're at the bottom or not, or at least finding an inclination of some sort, is taking a look at the RSI. Now, in the RSI, we're severely oversold in the RSI. However, on the 4-hour chart, these are the lines of support. So if we were at a historic low on the 4-hour chart, I would say there's not much more room for us to go down. But in actuality, we touched this line in November of 2019. See that? Oh, also, again, May 2022, same line. We touched, this line here. We touched this line May of 2022. We touched this line November 2019. We touched this line September 2019. And this line in November of 2018. So there's plenty of lines and support that go all the way back here. If you zoom out on the RSI, you come back and you see, November 2019, September 2019, and November 2018. What that means is that on the 4-hour chart, there is still room for the RSI to go down further. Does that mean that it absolutely will go further? No, because right now we're making a higher low in the RSI, which is bullish. And if you look at from this low to this low, we've got a higher low. But in the price, from this low to this low, we got a lower low. So that is hidden bullish divergence. No, that's just bullish divergence, just regular bullish divergence, not hidden bullish divergence. Hidden bullish divergence would be the opposite. Higher high in the price, lower low in the RSI. This is just regular old classic bullish divergence that we're seeing in the RSI on the 4-hour chart. So that bullish divergence could mean that we've hit bottom now and it's going to turn around, but it could also mean that we're simply taking a breather. It could also mean that this low is not in yet, that we're just taking a breather and we're going to crash down lower. But I do think that it is meaningful that this low and this low are higher, whereas in the price, this low and this low are lower. And so to me, I mean, bullish divergence about 60%, 60 to 65% of the time is meaningful. It's not always meaningful, but it is meaningful. Taking a look at the daily chart, on the daily chart, once again, we have the same phenomenon of bullish divergence. So from this low in the RSI to this low is higher. But the corresponding lows in the price from this low to this low is lower. That's bullish divergence. So there's bullish divergence in the RSI. So once again, we're severely oversold. However, if you look historically, we were lower over here in May. We were even lower than that over here in January. And so, yeah, we've got some lower lows. Basically, this line here, these are the two lines that are the bottom of the RSI, the absolute bottom historically of the RSI for Bitcoin on the daily chart. If you remember, I covered this in a previous video maybe a week ago or so, that here we had an ascending broadening wedge, which is bearish, and then inside this ascending broadening wedge, we made an ascending narrowing wedge, which was bearish. And sure enough, once we broke down out of that ascending narrowing wedge, we crashed. So it's all in the charts, my friends. It's all in the charts. So yeah, this is what we're looking at. This is a possibility coming down to touch this 19,646. That is a possibility. Revisiting the all-time high from December of 2017 is a possibility at this point, folks. And what that would do for us if we did is if we come to this high, that would take us down 71.82%, which in terms of Bitcoin crashes is actually not bad at all. I mean, if you go from the top here to the bottom here, that's 84%. So in terms of Bitcoin crashes, guys, this is mild. This is actually not a big deal, historically speaking. From the top here to the bottom here is 86%. So, yeah, that's not exactly accurate, but it's in the 80 percentile, 87%. So you got 87%, we got 84%. And if we touch 20,000, that's only 71%. So is the market bearish? Yes. One more thing I want to take a look at here is the RSI. We were making higher lows in the RSI. We've broken down beneath that low. And secondly, we've broken down beneath this low. So what that means is this over here is the historic low in the RSI on the weekly chart. So whereas we have lower to go on the 4-hour chart, we don't have very much further to go on the weekly chart before we bottom out at a historic low. Now watch this. If we look at these lows, this was, let's take this one, November 21st, 2019. Let's see where we were on November 21st, 2019. This was the low here. This was the low here. So whereas on the 4-hour chart, we're way into the oversold position, on the weekly chart, we're in the middle of the range. Okay? So that's what we're seeing with most of these, is that when we're this low on the 4-hour chart, we're not necessarily that low on the weekly chart. What that means to me is the weekly chart tells me how far we can expect to go down. And I don't expect us to break beneath this historic low in the weekly chart. This line here should be support. And if that line is support, we're going to touch it very soon, if we even touch it. And so, with that being said, I do expect a bounce. We still could come down and touch 19,646, but for right now, We've got support between 22,152 and 23,987. Is it bearish? Yes, folks, it is bearish. It is bearish, my friend. But just remember, the thing about crypto is the longer you wait, the more you're tempted to just give up and throw in the towel and say, you know what? I thought this was going to be something. This turned out to be nothing. But the better way to think about it is every day that passes by in this whole bearish scenario is a day closer to the breakout. So I wake up tomorrow. If it's lower, well, praise God, I'm a day closer to the bull run. Wake up the next day and it's lower, praise God, I'm a day closer to the bull run. The worst way to think about it is, I've lost so much money. Well, you only lost money if you sell. With that being said, this is not financial advice. I'm not a financial advisor, so I'm not telling you not to sell. I'm not telling you to buy. I'm not telling you not to buy. I'm just telling you what I see in these charts. Take it for what it's worth or leave it. But at any rate, thank you so much for watching. Thank you so much for listening. Do me a favor and hit that like button, that subscribe button. Leave me a comment. Check out my Patreon. But above all else, make it your aim to sleep in peace every night, wake in joy every morning, and walk in love every day. This is Cryptogenic, signing out.